In this video, I want to share with you how to trade pennant formations, what makes a good one, and how we discovered a really good one in Twitter and how we bought it for the model portfolio. Hello everyone, my name is Michael Lamott. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And in order to do that, I'm sharing with you everything that I've learned along my trading journey that has helped me and I believe will help you as well. So one of the things that has really helped me is learning technical analysis and being able to identify proper chart patterns, and it really just boils down to identifying where things are on the chart and then diving in just a little bit deeper and figuring out, is there more demand or is there more supply? Well, who's winning this tug of war, the bulls or the bears? And we're able to see that play out on all these different chart patterns. And so I'd like to walk you through this pennant formation that we saw on Twitter, what we saw, why we liked it, and why we ended up buying it for our own model portfolio. So right now we're looking at a daily and a weekly chart of Twitter, and the charting service that I'm using is a trading service called TradingView. Now, I did not annotate this chart just yet. I want you to take a look at it and see if you're able to see the pennant formation on this chart. Take a moment, pause the video, and see if you're able to see it on your own. Okay, now I'm going to draw it. Now first, I'm going to make the weekly chart a little bit bigger and zoom in, and you can see this big pole right here, and that's the first thing that you're going to look for in a pennant formation. Then after that, you typically get anywhere from as little, I've seen it be as little as 2 weeks, but those tend to fail, with as little or really about 3 to 5 weeks for the pennant part. So this part right here, after you have this pole. So anywhere between 3 to 5 weeks for the breakout. Most of the time it's on that third week because the market's just discovering it and it's giving it enough time to consolidate a big move up, which is what Twitter had. And so you could see the pennant forming this way and over here, and you get that price action tightening up week after week after week, and it's digesting this much bigger move. And on the lead up for these kinds of moves, ideally you see a lot of volume come into the trade, and that's again what we're seeing here on Twitter. Just look at this volume discovery here. You have this breakout. Twitter has been consolidating for a really long time. So way back to its IPO in 2013. We're not even back up to where it initially IPO'd, and that's a whole another story for why you don't just want to buy and hold on the first day that a stock IPOs, because you could be sitting with it for multiple years. But anyway, there's a whole other video on IPO base patterns, and I'll link that somewhere either up here or down in the description, so check out that one. But for Twitter right now, you can see that it spent a good amount of time bottoming, really from the early portion of 2016 through the latter part of 2017, finally started to break out, and volume has been coming into Twitter over the past couple of months, and it really came in after earnings were announced in the beginning of February. And so if we go and we zoom back out, move this thing over here, you could see too that this volume bar is the single highest volume week since Twitter IPO. So as long as Twitter has been trading since 2013, this week here was the highest volume week. So that's showing you that institutions are piling into this stock. They want to accumulate it. They started to accumulate back here but they're accumulating this stock heavily, and institutions cannot buy all their shares at one time. If they wanted to buy the several thousand to a million shares that they want to accumulate, however many shares they want to accumulate, they would end up buying the whole company, or they would end up moving the stock too far, too fast. They want to be able to get in at good prices themselves, and so that's why you see these big volume bars over several weeks or several months. And with the way that Twitter is looking right here, you could just see the demand piling in. That doesn't mean that Twitter won't consolidate again. It won't mean that it won't test this 50-day moving average. But for right now, Twitter is in a solid uptrend, and you can see the demand continuing to pile in. And as it broke out of this pennant, it's still doing so on significantly heavy volume. As of this recording, we're only halfway through the week, and we're almost at above average volume, or we're at about average 50-day volume, or 10-week volume on this chart here. So volume is coming in, still coming in, and it's breaking out. So we see that pattern here on the weekly chart. You could see it tightening up. You could see it break above this descending trend line. That's one entry point. If you got in above last week's high, that would have been a bit premature. Really, the first entry point was over here at 33.58. Let's take a look at the daily chart. Now here's that daily chart again, and I wanted to keep the weekly chart up just for another moment because it's kind of hard to see the pennant formation on the daily chart, but the daily chart is where we're going to find the exact entry point, or wherever it is that we want to buy. So on the daily chart, we are able to draw this same descending trend line. Let me get this thing again. You still get it over here. You could still get another resistance point somewhere in this neighborhood, and we ended up getting in at $34.48 on this day right here, as Twitter broke above this point over here. Right, so you want to make sure that the stock is getting above multiple points of resistance when you're looking to get in, and especially when you're trading on the intermediate term time frame, or really whatever time frame that you're trading. You want to make sure that there's multiple reasons to get in. So on a very short-term time frame, you might be looking to get in down here as it's breaking out above this over here. But because the model portfolio is intermediate term in nature, you want it to be getting above a more intermediate term level of resistance, and that's what you're getting up here. You're still getting in a little bit early. You're still getting in relatively close to support that is down here at the 21-day exponential moving average, and that's the basic idea. Now, you can see how support is forming on the daily chart in addition to the weekly chart. So down here on the weekly chart, you had this little ascending trend line, and that was forming the bottom of the pennant. You get that same thing in this neighborhood, and you could kind of see that pennant formation there, but you could also see this 21-day exponential moving average creeping up and starting to offer support as well. When we're looking for support, again, it's so important to have multiple layers, and in this case, we end up with the 21-day exponential moving average. We end up with a support zone right around here, and we also have this little ascending trend line that are all going to offer support. So if Twitter were to roll over, there's a few different layers that it would need to break down to in order to stop us out of that trade, and that's something that we're going to be interested in. On the actual breakout, let's blow this up a little bit more. You can see that volume is starting to pick in it. It's about average volume over here, and you're getting more volume starting to come in as it's working its way higher. And these are all positive things that you want to see as your stock is breaking out. And again, we want to always know where we're going to get out of a trade before we initiate a trade, and that's why being able to identify layers of support and resistance are so important. And think that's about all that I have to say about pennants and pennant formations and how to get in and how to get in early. Let me know what you think. Leave a comment down in the comment section below. Let me know if you need any help, if you need any additional clarification. And if you like this video, click that thumbs up button. That's really going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. I want to thank you for watching, and stay tuned because I have a very special offer for you. Check it out. So if you're not yet familiar with it, I want you to get familiar with it. We offer an advanced stock report service, and within that stock report service is a model portfolio. And in that model portfolio, we share with you everything that we're doing. So you would see patterns like this evolve, and we would show you exactly where we're going to get in, where we're going to get out, and how much we're risking on every single trade. And we're treating this portfolio like a real portfolio. So it's not just we're going to list out like, okay, here's a whole bunch of buy points, here's a whole bunch of sell points, and you have a dozen or 24 stocks with all these different entries and exits, and that's not really something that somebody's really going to go out and buy 20 stocks unless if you are a mutual fund. For individuals like us, we're only going to buy a small handful of stocks, and we want to be concentrated in the best names. And so that's one of the real keys that this advanced stock report service does. It's treating this model portfolio like it's a real portfolio. And I've already heard so many stories of people that are having incredible success with this. Like somebody just wrote in saying that you helped me buy my house and have a down payment for my house with the trading that I was able to do and the success I was able to have from your advanced stock report service. So go check it out. I want you to be successful with this. I've personally experienced success with this. I am doing a full series of videos showing you how I was able to triple the return of the S&P 500 last year, but just simply by taking the stocks that are recommended in this service trade for trade for trade. And you can do the exact same thing and be able to just read this. It only takes about 5 minutes on a weekend to read through this report, enter the orders, and if that's all that you're interested in, just do that and that's it. So check it out. You could try it out for 3 whole months for only $27. That is super cheap. You're not going to find that anywhere else, and you'll be able to really taste this service and be able to try it out. And with that service, you also get full access to me and to my partner Adam, who is writing it, and be able to ask every single question that you have about the service, about your own trading, about anything at all, and we will be there every step of the way to help guide you. Take advantage of this offer. It's only $27 for 3 whole months of the service. And then if you like it, stick around. I'm sure that you will. Use coupon code 3427 and check it out. I'll link it somewhere here, somewhere down below in the description. Check it out and use coupon code 3427 and get 3 whole months for only $27.